Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 18th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. And my outcome during this next hour, well, it's to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with my favorite. My favorite is called Become Your Own Electrician, the electrician of your beliefs. And the reason is because beliefs have the power to create and the power to destroy. You and I, we have the extraordinary ability to take any experience of our lives and create a meaning that disempowers us, or one that can empower us and take us to places we never even dreamed of. Think about it like this. There's only one thing we can control in life, the meaning that we give to something. That's the beauty of the markets we trade. We've got bulls. We've got bears. One that sees an event as a selling opportunity. One, a buying opportunity. Our beliefs, the meaning that we give to events, charts we follow, statements, criticisms, whatever it is, we are the ones in control of that meaning. That's pretty cool when you think about it, because what you and I, what we can or cannot do, what we consider possible or impossible, it's really rarely a function of our true capabilities, and instead is more likely a function of our beliefs deep down inside, our beliefs about who we are. That matters because all personal breakthroughs, and folks, we're all looking for breakthroughs. It doesn't matter what level you're at out there. You're always looking to get more out of life, and all breakthroughs begin with a change in what? A change in beliefs. And the most effective way to change our beliefs, change our blueprint, change our wiring diagram, is to get our brain to associate massive pain to a disempowering belief. You see, you and I, we must believe at the deepest level that our disempowering belief has cost us in our past, and if we decide to continue with it, it'll only cost us in the present, and ultimately will bring us pain in our future. That is no way to live, folks, no way to live at all. And knowing what we don't want, well, it's just as important as knowing what we do want. Because once we rid ourselves of a disempowering belief, we must associate tremendous pleasure to adopting, or at least the idea of adopting, a new empowering belief. And then lastly, we've got to know. We've got to know that at any moment, the decision that we make can and will change the course of our life forever. It could be the next person we stand next to in line or sit next to on a plane. It could be the next phone call we make. How about the next phone call we take, the next movie we see, book we read, page we turn, newsletter we subscribe to? Any of these things could be the one single thing that causes the floodgates to open. And then, and only then, all of the things we've been waiting for will fall into place. That is my favorite. That is the entire life philosophy. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got a relatively flat-ish type market. The Dow is trading off 11 points, no big deal. It's trading at 16,796. S&P is up 90 cents at 1942.90. NASDAQ 100 is down 5 points at 37.75. Russell 2000 up 2 points, trading at 11.74. Big day for the Russell yesterday. NASDAQ Composite off 7 points, trading at 43.30. Transports are up 69 points, up nearly 1 full percentage point. Being motored, or helping to motor that along, certainly is FedEx. We'll take a look at stock charts here for individual equities. We'll take a look at the indexes here during this hour. The semiconductor index off about $3 right now. No big deal out there. S&P Volatility Index down at 1172, off 34%. That bodes well for the bulls. Let's go take a look at what's going on index-wise out here. Whoops, I didn't mean to do that. Let's take a look at the Rhodes Momentum Indicator charts here. These are the tools that I put together using the Ninja Trader platform. So there's 3 trading platforms that I use out here. All are really, really good. All have unique tools. One of the reasons that I use the Ninja Trader platform is because you can code your own strategies. And that's very cool because you can backtest, you can automate programs out there. That's what you see on my screen here is a Rhodes Momentum trading system. Now you can do it with all, but they use C# as their programming language, and you can find great C# programmers out there all across this beautiful world of ours. Now let's go switch, take a look at the daily charts out here. Let's start off with the Dow. Let's go see what the Dow Jones Industrials is doing out here. Let's take a look at its daily chart. Let's take a look at yesterday's candle session. What we can see here inside the Dow is on the trading session here of June 12th, I've got a candle here labeled with a green U. Green U means that the Dow is in an uptrend. It means that the sellers of the Dow were able to push prices down to form one of what I like to call my lower threshold candle signals, and that was the trading session of June 12th. So how do you trade that? Here's how you trade that. If you see a close above that candle session, this is the Dow again we're looking at, that high is 16,841.57. That'll immediately be upgraded into a buy mode. A buy mode, it says, okay, that's a bullish sign. It's a continuation move. And not only should we see the highs be tested, which are the highs from June 9th, we'll go ahead and see those highs be taken out and likely a further move higher out there. Likewise, if the market responds poorly, whether it's to Yellen's news or anything else that it wants to, heck, we got plenty of things out there to choose from in order for no lack of things for the market to choose from in order to get all worried out here, worrywart. If you see a close below the low of that session, 16,703.73 out there, that's going to tell us that the sellers are still in control. We can expect another leg down. That leg down would likely be a retracement level or a test of the May area, the May 20th. The swing point area. So right now, that's why it shows yellow on my screen. If you're watching this on Tiger TV, you see yellow, and what that yellow is all about is just simply caution. We're in a caution. We're in an area here where the Dow is not on a longer-term basis. It's telling us it's still in a nice uptrend out here. But with regard to adding to a position, or certainly not telling you to be short, but nor is it saying to take a new long position. But on the daily chart, close above that candle session would be giving you that signal. That's what's going on the daily chart. Let's take a look at the weekly chart out here. It is just the beginning of Wednesday. Let's go see. We've got forming yet a little dark cloud cover inside the Dow on a weekly basis last week. Not a total reversal signal out here. No follow through as we speak right now. Yes, it's making a higher high and less relative strength, but we do not have the reversal signal, not the one that Stevie looks for out here. So the weekly chart for the Dow looks pretty good. Let's take a look at the transports, which are moving this morning. Let's go take a look and see what they're doing. The transports here last week gave the clearest signal of a potential reversal. On a weekly chart, and it's not easy to do, they went ahead and gave us a key reversal session. I believe I covered this yesterday. It was also a bear sash style candle out there. What you need to see, what it needs to show us, if it truly is a significant reversal, it needs to see it close. First, it continued to move lower this week. We're not seeing that as we speak right now, and certainly not today. And you'd like to see it close in the 78.52 level. You'd like to see that area actually get cracked. That is the weekly chart out here. It's not having follow through. In fact, that bear sash candle, in essence, is vanished this week. If I were to blend these two candles together, and I do like blendies out there. I do like blending candles together to help give us a clearer signal as to what's really going on. If we take a look now at the transports in the Dow Jones Industrials, we took a look at one of Stevie's green lower threshold Rhodes Momentum indicator signals. Well, the transports have the same signal. That occurred on the same trading day, June the 12th out here. That says that if, in fact, the transports are going to close above 81.35.64, that's the high of this session, that's going to move it into another bull mode, another buy mode out here, and that is in the transports. That has been the weakest. Now, what's interesting to me about this chart as I take a look at it, when I take a look at these two moving averages, the dashed line and the solid line out here, what is interesting about it is we have not seen a bearish crossover. So this still even though the transports were the one that took the biggest hit in the market here over the course of the past week or so. They've only switched to cautionary zone. In fact, today there looks like they want to try to upgrade into a nice little buy signal out here. But of course, we need to wait for the end of the day close to see what happens inside of the transports. But so far, so good. Let's take a look at the NDX. Let's take a look at the New York Stock Exchange. Let's look at the NYSE. Here is the daily chart. Now, the daily chart, from a summation index standpoint, in fact, I'll put that on the screen here because you may be saying, hey, what the heck is that? Let me go ahead and put that out here. Now, this is I'm going to put up the New York Stock Exchange. This happens to be the Ensign Windows charting tool out here. And as I put this up, what's nice about this, it allows me to integrate external data in a relatively easy manner through one of its utilities that it has. And one of those utilities that I use out here is I use the summation index. I use the price and volume oscillator out here, and they help me to understand who is in control of the market, whether it's the bulls or the bears out here. And if you look at the bottom of my screen out here, you'll see three little squiggly line areas. One is the summation index. It's a great tool, another great tool for helping to identify trend. And when it's moving higher, it is most certainly saying don't be short a market. This is the wider swath of the market, obviously, so there's no ETF out there that allows you to trade the New York Stock, not at least one that I know of, to trade the New York Stock Exchange in an ETF manner out here. But nonetheless, it's the wider swath, and it's giving you a better feel for what the market is doing. The second area is the volume oscillator out here, and the third area is the price oscillator. Focus on the price oscillator right now because it is just slightly below the zero line out there. It had a -8 reading out here yesterday. And if it gets above that, when it gets above zero, it's bullish. That'll turn the summation index up. When it's below that, it'll go ahead and turn the summation index down. Now, it's a little bit of a lagging indicator. But nonetheless, the summation index has been turned down since the trading session of, June the 12th out here. Might have been June the 12th is when it finally moved down. And what we've seen here, if I blow this up on my screen, we actually have seen a move that's kind of just slightly moved higher out here. So for the bears actually taking control of the market, they've been able to do diddly squat with it. The other thing that's important here is the New York Stock Exchange. Remember, one of the most bearish patterns is nylon top reversal. One of the most bullish patterns is nylon bottom reversal. Inside the New York Stock Exchange, we had nylon top. That had formed between the trading session of May 9th and the May 15th area. And that area was taken out, and it was taken out on the trading session of May 29th. If the most bearish pattern is taken out, and that can't be defended, what's that telling us about the market? Yeah, it's telling us that it's strong. In essence, that's really the way it's played out here in the New York Stock Exchange as of this moment, as of June 19th at 10:20, 10:19 in the morning out here. And right now it's trading into the swing point. The New York Stock Exchange, if it can get more than 430 net advancing issues today, actually the bulls will go ahead and take it back most certainly. Right now what we've got out here, see, before we cut away to break, I'll tell you what we've got. It's only 23 net advancing issues, but the key is going to be at the end of the day. 430, I believe, is the number out there. 430 or greater, and the bulls take charge. Very flat markets. Expect that to be the case till 2-ish, 2:30. Steve Rhodes, TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see here. Right now, we've got the Dow is off 20, S&P is up 1, Composites off a couple, the Russell 2000 down a couple of points out there. Pretty interesting. I just saw going across the screen, the USPTO, the Patent Office, has revoked the trademark for the Washington Redskins out there. I guess somebody's posted that in the den maybe as well out there. No, that's not the Redskins logo. That's okay. That's the Florida State logo. So that's pretty wild. Now, I happen to have some experience with the USPTO office. You know, folks, I don't know if you can still find it. I got involved with some patent litigation, not out of desire, many years ago, and at the same time, one of my patent attorneys sent me a patent that the USPTO had approved, and it was for swinging on a swing. Now, this was back, I don't know, this was maybe like around 1990-ish, 1999-ish time frame or so, something like that. 2000, 2001, sometime right around that time frame. Now, I got involved with it because I started an industry. I started a business here in the United States. It was subsurface engraving in solid transparent materials out there. And it was a technology that was taken from the days of Gorbachev and Ronald Reagan, the Star Wars days out there. And that was using lasers. I forget the name of that movie out there where they talk about the guy lasers. But they were using lasers. The theory there was to be able to utilize a laser beam and be able to knock a missile out of the air. And the way that they do it is a laser is nothing more than a light source, and you can focus it to to an area that creates enough energy that energy creates enough heat, and that heat then goes ahead and explodes the device out there. Well, that same technology, it was developed back in the 1970s. Actually, it was developed when lasers came around. They had to be able to test it to show what laser light could actually do out there. But the technology that I use, that technology, in fact, I hired a couple of guys that worked on the Russian version of the Star Wars program out there, because when Perestroika came around, those guys were looking for jobs, and I happened to be traveling around the world. Russia was one of the places that I had visited, and that's when I came across this product where it had an image suspended inside a solid block of crystal out there. Nonetheless, we had patent attorneys take a look at the patents. There were prior art, so much prior art that Lawrence Livermore Labs out on the West Coast, they were utilizing this technology. They were making artwork. There are guys that worked in the department out there that were testing these systems out. They were creating artwork inside solid blocks of glass. In fact, back in the 80s, Dan Quayle, and he was running for vice president. He was being toured around there. University of Central Florida as well. They presented him with some pieces, and these guys that sued me over patent litigation, they were patent trolls out there, never produced a dang thing, and just came after me because of my high-profile location, which were, Disney World, Disneyland. I mean, I owned and operated a retail store inside Walt's Castle in California. How cool is that? There are only a handful, two other guys that I know of that have actually ever owned and operated a retail store inside that castle out there. Otherwise, it's just Disney-owned type products. So, in any event, so when I see the U.S. Patent Office, I'm not saying whether they should or they shouldn't revoke this stuff on the Redskins out there. That's a whole different story. But I just have to smile at kind of the ineptness of the folks that are involved with that institution. Period. The long story, that was actually not the long story, but the short end of it is, after $2 million of legal fees, the folks that were suing me, in essence, dropped the case. We settled for me paying them a royalty of 0.001%. They needed that as a victory because I was the kingpin in the marketplace, and they wanted to be able to, and it was a strategic, remember I talk about strategy and tactics out here? It was a tactic and a strategy for me to go ahead and give them a patent for people not to know what I had settled for so that they could go ahead and take that and keep others out of the business out there. So I had to get something out of that money that was spent inside that. But the patent office, when they can patent how to swing on a swing out there, you've got to wonder who is watching over what the heck is going on. In any event, the markets are kind of flat out here, so I guess today is a little story day for Stevie out here. There was a question inside the den I saw that said, hey, what is the market likely to do, or how do you set up maybe buy and sells inside the market after the Fed responds? I would say this. I would come back and I would take a look at this chart here. It's a 120-minute chart here for the S&P futures. Oh, how's that for a strategy? You have to wait until we come back for the next segment to hear what I've got to say on it. Just kidding. I wasn't paying attention to time. 877-927-6648. We get back. We'll take a look at that potential strategy in the ES Mini. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're going to go take a look at at a strategy for the ES Mini out here, and take a look at different opportunities, different potential patterns, and so forth, in which to be able to trade the S&P futures after the release of the Fed minutes. So let's assume that the market's initial instinct is to trade lower. And we're going to start off by taking a look at the 120-minute time frame chart for the S&P futures. This is the September contract. Now, what we can see out here is that it has formed a 0.618 Gartley sell pattern. It completed that. You can see it actually made it up to that level as we were just coming on the air here at 10 o'clock this morning. That price projection that I had in here was the 1936.50-ish type area. It actually got up to 1937. You got to like that. And let me also put up whether it's overbought or oversold. Let's take a look at the relative strength indicator. Neither overbought nor oversold here. If, in fact, the first instinct of the market is to trade lower, where should you be looking for potential support areas? I would argue, not argue, but I would suggest that one of those areas you want to be paying attention to is 1928. 1928 should become, now that doesn't mean that it can't be pierced. Take a look at this candle session here at 10 o'clock 2 days ago. Who knows what was released there, but the market pushed lower on the 120-minute chart. That ended up holding as a support area. Even during the following 2-hour trading session at 12 noon, there was another attempt by the sellers to push it down, but that area acted as support. It's a very important level of support on the 120-minute chart, and that's what we're looking for. So any push down and holding that, I consider that to be bullish. Any push down and that level failing, that means a close below it on a 120-minute chart out here. That would suggest, okay, maybe we're going to see a retracement into, I'll just say it Friday, where it's Wednesday. We see a couple more days of retracement before the market decides to take its next leg to the upside out there. So that's what I would be paying attention to, is that area. If the market breaks out from here on 120-minute chart, we're neither overbought nor oversold. Next levels are going to be 1940 or 1947 to make a 100% move of a move out here, and that's what you should be looking at. So that's what this chart, this is using the Anson Windows chart, that's what it is signaling to us. Let's go take a look at the market profiles of the ES Mini. Let's take a look at them on different time frames. Remember, the number I gave you there was 1928 to be paying attention to. From upper left-hand corner, this is the E-signal system. It's got the TAS market profiles on it. Those are the horizontal lines, red, green, cyan, light blue out there going across my screen. The red are the unfair highs, resistance. Green are the unfair lows, support. And the light blue line is the point of control, largest number of transactions, the congestion area where price is at. We can see here on the 120-minute chart over on the left-hand side that price has bumped its head up into the resistance zone, 1935.75. 1935.75 is resistance on the 120-minute chart. On the 240, it's 1937. Remember on the last chart we were looking at, I said price had gotten to 1937. 1937 it got to, and it held. Excuse me, I'd say paying attention to the 240-minute chart seems like a thing to do. It says, excuse me, it says that, remember we were looking at the spike lower on that other chart that I put up there? It says that the spike lower in 1928 is an important area to hold. It says a spike lower would take us probably to about the 1920 level, 1921, right around there. So a spike down to 1921, closing back above 1928, I would consider that to be bullish. Breaking 1921, I would consider that to be if you were long, to make sure that you've tightened your stops up. We're probably going to see some type of A to B equals CD pattern, or some type of, at least a test of the lows back out there, which would take you down at least 1917, maybe beyond that, though. I think it would more likely signal a to B equals CD to the downside. And if we go draw that pattern in, let's go ahead and do that here. So here's your downside potential. Let's use an A to B equals CD tool. Let's use as the high, 8 o'clock in the morning. This tells me, this is a 240-minute chart. It was 12 o'clock noon that took place on June the 9th out here. The B point's going to be the swing from June 15th, and then I'll use today's high so far as a C point. It would say 1-to-1 A to B equals CD would take it to about 1901, 1891. I'd have to say 1891 is your outcome to the downside. I would have to say 2000 is your outcome to the upside out here, and those are parameters that I would be paying attention to. Inside the 120-minute time frame, the unfair low, I gave you the high. The unfair low or support happens to be 1929. So that 1929 moving right into my 1928 area as well out there. And then ultimately, in order to truly be bullish, what you would see today is today on the daily chart, you would see it close above 1934.75. Let me make sure that's the number out here. 1934.75. That is the unfair low on a daily basis. If you can hold that level, that would be bullish to neutral from a trading standpoint out there. So I hope that helps you guys out with regard to taking a look at the ES Mini, some different patterns that are out there, some areas of support and resistance, and how one might take a look at playing that to either the upside or to the downside. As long as you stops out there, you're going to be in pretty good shape out there. And the question, I had somebody ping me in a private ping. They said $2 million for patent litigation. Yes, and we own patents as well. So that was the other thing that was. So we had some patents on that technology because of some improvements and some enhancements out there. But of course, they came after me because I was the one with the highest profile, with stores at Disney World, Disneyland, Universal Studios, the Venetian Hotel, every retail store, every drug store. Every retail drugstore's photo counter, which means every Walgreens, every CVS, every Rite Aid, every Myers, used to be called Myers Thrifty Acres up in Michigan. There were 20,000 of those stores. So if you're going to I don't know what's the right word. They were patent trolls. And of course, their first outcome was to their mistake. Their first outcome was to first come after us because they figured, hey, we got a lot to lose, so we might be ones that would be willing to settle. That's all they were really looking for, was really to settle. And then, but their big mistake was there were a number of other small folks, people I'd kind of spawned this industry. Not kind of, I did spawn this industry because we saw the Chinese move in and distribute all kinds of glass tchotchkes through different carts and malls and places like that. And but there were also a number of other, private entrepreneurs that got into the game. It didn't bother me. I didn't care. We had our own marketing plan in the retail business. We had our own marketing plan in the wholesale business. We were providing products. I provided products to Ford Motor Company for years out there. When the Paris Hotel and Casino opened up, and they put one of my products in each of their rooms for the first 3,000. They bought more than 3,000 products. But so I had my marketing plans. I wasn't worried about the other guys. But that was the mistake. The patent trolls got so greedy, they went after all these other small folks out there. And they happened to get one of my I guess largest competitor. I wasn't really into the gift shops out there. I was more into personalized products than I was selling something with a golf ball inside it, if you will. And their mistake was they decided to go sue everybody. And now, if you've ever been sued before, what have you, you get the notice, you get served, you get a little fear runs through you. You're like, oh my God. And you can imagine all these small guys. So what we did was we went ahead and contacted every single one that had been sued. We said, okay, look, we're going to fight this. Would you guys like to stay in this business? And they said, yeah. And I said, okay, well, we've already got a legal counsel. We've already been through it. Here's what the estimate is going to be to fight this thing, which they came back with $1.75 million if this thing went to court, and it would take a period of 3, 4, 5 years before we got there. And we did the amortization on it, and we said, here's what your monthly fee is going to be if you'd like to join this suit. And so we were able to defray that $1.75 million, if you will, over a period of time, and for them just became just kind of like a rent expense, just an expense. And all of a sudden, we turned. So the great news is that the guys that were suing us didn't catch on to this. And what we did, this is strategy versus tactics. We supplied them with a list of everybody. So we went back to the entire group, and they had originally added, they were like 9, then they added a couple more, and we said, hey, this is pretty cool. They want to keep adding people to this lawsuit. And we did this early on when we saw what their strategy was. So our strategy was to get together with everybody that we knew in the industry, find out everyone that was in this business, owned this type of equipment or what have you. We got in touch with them, whether they were sued or they weren't sued. We said, look, we're going to turn your names over. Here's a way that you can go ahead and you can fight this thing. You can band together with us. We gave the names to the guys who were suing us. They went ahead and added them to the lawsuit. That gave us the leverage to get those that wanted to stay in the business to join us out there. And so then it was them, because they had to spend as much in legal fees as we did, and we had it at one stage. I think we had that distributed between 19 different parties. So you take $1.75 million, divide it by 60 months, divided by 19, and you tell me if that is not a strategy in a way to be able to deal with that. So it was an experience and a half out there, and there are folks that have approached me that have patents on things, and I share with them my stories and my experiences, because I said, when you have a patent, and I had patents, that having a patent doesn't really buy you a whole lot out there, because what you have to do is, if you want that patent to be worth anything, you've got to go out there and you've got to defend it. You've got to go sue others. And I can tell you that my case, the thing that I was involved with, was no more complicated than anybody else's. So if it's an industry and you've patented something, hopefully you've patented something where it's an industry of merit, where there's significant revenues out there, you can plan on, the question is, do you have $2 million? Because that's what it's going to probably cost you to go out there and try to just defend your work out there. In any event, I know that's not what you tuned in to listen to, but it is what it is. We've got a flat market out here. Let's go take a look at some things that are moving and grooving out here. Let's take a look at today's movers out here. So big movers. Let's go take a look at FedEx. Is FedEx still up? Yeah, they are up $6 and change. Let's go see what that is trading into. FDX is a ticker symbol. Gapped up this morning, taking out a swing point. Looks like an A to B equals C to the upside. Swing point was from June the 2nd. 1.2 million shares up above its unfair resistance level, which is at 144.39. It's in full-out bullish mode out here. 2.3 million shares today. So you've got a confirmed A to B equals C to the upside. You've got a fairly large one. Let's take a look at the small one out here. The small one, I just simply come back into the lows here. Looks like on the trading session here of April the 11th. That's going to be our A point. The B point I'm going to go ahead and use out here was the trading session of May 30th. Pullbacks into the trading session of yesterday, June 17th out there as our C point. 1-to-1 A to B equals CD. Has a price projection of 152.47 out there. I'd say 152 to 156 is likely a target area, and that is for Federal Express out here. Let's take a look at a weekly chart, see if there's any kind of resistance here on the weekly chart for its market profiles. See if it's up over that area, and this is a larger A to B equals CD. So here's a large one. Yeah, it's up above. In fact, 138.01. Interestingly enough, yesterday's low was 138.30. So yesterday you saw FedEx move down into that 138 area, which was the unfair high, the resistance of the market profile. And after having been in bullish mode, and so look at how that worked out on this trade. Now, from a weekly standpoint, you've got a swing high at 144.39 the week of December 30th, 2013. 8 million shares on that trading session. It has done 5.7 million shares. We're only at Wednesday. FedEx is actually going to, if it can close above, I don't know what it's going to do, but if it can close above 144.39, it will actually confirm a very large A to B equals C to the upside. This would say FedEx would move up into about the, I'm going to use this B point here, which is from, December 30th. Man, this actually says FedEx wants to trade up to like 196. 180, 195 is your 1-to-1 A to B equals CD. 196.58 is your 1-to-1.272. So FedEx is getting some juice. It's getting some energy, and it just needs to close above 144.39 on a weekly basis. And I'm assuming it's going to have the volume with us being with it, less than halfway into the trading session and having well more than half of the volume there. So not a bad-looking stock chart as we speak right now. Let's take a look at what do we have moving to the downside? You got BP, Prudhoe Bay. BPT is the ticker symbol, off about 4.75% here this morning. Looks like it's headed to the 94.99-ish level. It's on, I'd have to say probably more likely 92.34. Looks like this had some volume yesterday to the upside. For this equity, it had volume to the upside. 268,000 shares is volume inside of this equity. Today, pulling back with 168 already. Looks like BPT headed to the 92.34 mark into the swing point of May 29th. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 25 points out here. The rest of the markets are pretty much, well, they're all really flat. The S&P's up 23 cents. NASDAQ up off $1.95. Russell down a couple of points out here. Gold, what is gold doing out here? Gold's down 30 cents. Silver's up 3 pennies. Light sweet crude is flat. I mean, a flat market. I suppose it is a sign of the message of the morning out here. We should expect a flattish type market in through about the 2:15, 2:30 time frame. I don't really know what fireworks it is that Janet Yellen can really, put in the marketplace out here, but we'll see. We'll see what happens. We'll see what kind of volatility. Speaking of volatility, where is that volatility index? Let's go take a look at it as a measure of helping us understand what the markets want to do or are doing. The VIX index here right now, gapping down this morning. How about that? The 50-day has not been able to budge through the 50-day exponential moving average. So if these markets are going to move lower of any significance, you need to see it trade above and stay above the 50-day exponential moving average. That is priced out right now at 1264. So another thing to be watching as you go into today's close. If it's above 1264, its message here would be that we should see some lower price for a period of time, a short period of time, before we then get our next leg to the upside in the market. So we're going to go back and take a look at a couple of stocks here that are popping in the marketplace. We took a look at BP Prudhoe Bay. Let's take a look at Zillow. Now, let's see what's down. Let's take a look at Dominion Resources. DOM is a ticker symbol, off 28% out here this morning. This is down with some volume out here. So let's just, wow, that's a daily chart. That is, that's dangerous looking. That's wide price spread, accelerated volume. That's volume off of the highs. DOM is the ticker symbol. So I don't know what the news was behind this, but it is not good news. Where is this going to travel to? Now, here's where we want to really take a look at volume. Where can we see any kind of high volume bars out here? And on the daily chart, it takes us back into the, it's already there. It's already headed there. It's already into that trading session, which is the November 20th, 2013 area. That had volume of 305,000 shares. The high was 695. It's trading out right now at 698. So it looks like it's going to go trade down probably to the lows of December of 2013, right around the $5 area out here. But that has got some major damage inside of that. That is Dominion Resources. DOM is the ticker symbol. We had something here. What is this? ZS Pharma. What did they do here today? Did they save the world? Let me see here. See what kind of news is behind it. ZSPH. Oh, it's an IPO. Okay, so no, they saved their own. If you're the CEO and the CFO, they did in fact save their world, because there's somebody making some bucks today. In any event, it's trading at $27. We won't be paying attention to that. You got Viper Energy Partners. What is that? They have expect an offer to close. So there looks like that's a buyout out here. And all these buyouts, they all make sense. We talked about it a couple of years ago with all the cash on the balance sheet. So with the U.S. dollar index getting stronger, that what the companies needed to do was simply go out and consolidate and buy businesses out there. So that should continue on for quite some time. Well, folks, it has been wonderful to be with you on Wonderful Wednesday. Stay tuned. Our man Basil Chapman is up next. After Basil, we've got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. I look forward to seeing you bright and early mañana. Take care. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.